Before hiring or changing a financial advisor, there's questions I would ask. We provided a checklist for you. You can find at yourlifeafterwork.com, or you can consider this program today. Hi, I'm Joe Clark. Welcome to Consider This Program.
I'm Dean Huddleston.
We are happy to have you along. Hey, we are both financial advisors. I happen to be the managing partner of the Financial Enhancement Group. Dean is one of our senior advisors in the Lafayette office. We have offices in Brownsburg, Fishers, Lafayette, Anderson, Rensselaer, and a few scattered out throughout the rest of the country. Most of it's based here in central Indiana. We manage a little over $650 million at the time of this recording, which is back in June of 2021. And I get asked questions all the time where, actually we'll be at the end of a meeting, Dean, and somebody will say, I want to go home and ask or talk to my husband or my wife. I get that. Or I'll ask them if they have any questions, and they go, I don't know what questions to ask.
Right.
So I've been asked to do the show again. We've done it before, but I've been asked to do the show again to say, okay, if you don't think that Joe's right and the Financial Enhancement Group's right, what questions should you be asking somebody else? So I thought we'd walk them through terminology and some things that we would go through. I've got a checklist that I put together that it's free. You can get it at yourlifeafterwork.com. Just go in, hiring an advisor. It's going to give you some of the questions that I think are important, but let's walk down. One is really about the company. So you've got a company name that's going to be involved in the process, Dean, right? So in our case, it's the Financial Enhancement Group, but it could be a real big name or it could be a real little name, right? Here's where you need to differentiate between what's called a custodian and a company. So what's a custodian, Dean?
Custodian is a third party that holds the assets for another individual.
So when you think about a custodian, that could be TD Ameritrade, in our case. Could be Charles Schwab, where we'll wind up eventually. Could be Pershing, could be Fidelity, could be Wells Fargo, could be Merrill Lynch, right? Those are all deemed custodians, if you will. They're also companies, right? So the Financial Enhancement Group is not a custodian. Is that a good thing or a bad thing?
It's a good thing.
Why is it a good thing?
It's a good thing because that is another layer of security that you can add to somebody. We manage money, but we don't have control over it as far as being able to take it out or in. So it's a security issue for the families we serve.
Well, we have absolute control of it. We don't have access to it. There's a difference, right? Here's why I would tell you that you got the right answer. I would rather deal with a company that I knew that wasn't going to go under, that had no affiliation with a custodian, because it's our job every other year to do a test to make sure that TD Ameritrade is the best place for you to be, or that Schwab is the best place. We pay money to have these tests that are done to make sure that we're with the right custodians. We are not married to them. We get zero money, zero inflection from any custodian that we've ever worked with or use for that very reason. So you want a company that is, in my mind, that works with custodians, that has the experience to do it, but not necessarily in any way controlled or influenced or under a contractual obligation. And you can ask those questions, by the way. If you can ask, are you allowed to use any custodian? Or you can ask, do you have any certain product mix or asset mix that you have to use to be able to maintain your relationship? You can ask those questions. They're detailed, but you can ask them. The second thing that I would want to know, not custodian or the company, once I got to there and was comfortable in those two areas, is I would want to know the process, right? How do you invest, right? So let me just contrast. Let's think about the biggest wirehouse that you know. Maybe I already used their name, right? And they maybe have 15,000 advisors, right? But you think you're with this big company, and if Dean goes under or goes out of business or retires, and suddenly they call it a book. I hate that word, but suddenly we move Dean's book. You're part of the book, right? We move the book over to me as the new advisor, right? And I still work with XYZ Wirehouse, but Dean's expertise was in real estate deals, and mine is in alternative investing. right? So we worked at the same company. You didn't have to change any paperwork, right? But our processes are entirely different. And if you wanted to get to the root of where Financial Enhancement Group may have one of our uniquenesses, it is that we have an identical process. We make sure that Dean thinks and Joe thinks, like Aaron thinks, like Grant thinks, like Jamie thinks, so that we're all working in the same page. In fact, we have an allocation meeting every week to make sure of that. And we have a planning team meeting every 2 weeks, and then quarter days. Every quarter, we'll have a half or a whole day where we come in together and we run through a scenario like we're going to do in the next segment of the show to say, hey, here's where we are, right? Mm-hmm. Here's how we do it. The process has to be the same. I get hit by a bus, you lose nothing getting Dean to take over, or vice versa in terms of process. You may miss the personality, right? But you're not going to miss the way your money is taken care of. You don't have to start over. And in my mind, that is critical. The second thing is whether or not you would deal with somebody who's a fiduciary or somebody who functioned under suitability. Talk to us real quickly on that.
Fiduciary is legally bound to manage your money as if they were you in your same situation. An individual who works on the suitability side does not live into that same rule.
How would I know?
You would know by typically a suitability is going to charge fees and commissions on products that they offer for purchase.
So if you look at the bottom of the business card, or the way it is, it's either going to say they are registered investment advisors, they are they're with a broker dealer, or they're SEC registered investment advisors, right? So if you're an SEC registered advisor like we are, means you have more than $100 million in assets. Like I told you, we're over 600. If you have a broker dealer, it means you're able to sell products. Now, every now and then somebody who doesn't like me will say, well, Joe says he doesn't sell things, but they clearly are licensed with the broker dealer. Yeah, because people listen to this radio show or our podcast, and will call up and they'll have an annuity that somebody sold them, or they'll have an insurance policy that somebody sold them, and we're able to transfer that to us so that we can properly service, not so we charge commissions, but so we can help you unwind that in your best interest. So it's not as clear cut as that, but you can always ask somebody what their conflict of interest are. If they don't understand that question, that would be the first sign you might want to run. Pretty much everybody has a conflict of interest in most relationships. You just want to know what they are, and you certainly want to know that the other person is aware of where they are. Then you get into the difference between fees and expenses and understanding what they are. There are fiduciaries. They're obligated to do the best that they can do for you, but they work at wirehouses or big custodians, if you will, where they are encouraged to use mutual funds. And they will tell you, there's one of our companies in Indianapolis will do it, they will tell you that their fees are much, much lower than ours. But what they don't tell you are the expenses of the mutual funds that are inside. So you need to understand going into that relationship, what are your fees, but also what are the expenses of what you use? We will show people a net return of what people have had based on fees and expenses and all the trading cost. But that's a very, very tough number for people to get and to grasp. It's not just what you're paying the person in front of you. It's what you're paying the whole operation to take care of your wealth. An important question. I would ask what the asset management process is for the same reason I would ask the difference between Dean and myself in terms of our planning belief, right? If Dean is a modern portfolio theory guy and I believe in active asset allocation, and Dean dies or retires and your stuff moves to me, you may be under the same big umbrella, but you could have a very different asset management think tank or process. Understand what that process is, how they come up with it, and don't buy into that. Well, we've got 1,200 chartered financial analysts, and you give their portfolio recommendations, and then Dean chooses off that list so everybody gets the same thing. That is not the way that it works. Sounds really good on paper, but that is not what happens in the back room. The next one then is tax planning. Understand what their tax planning strategy is, how they're going to help you take care of capital gains, how they're going to do the reporting for you for that side, what they're going to do in terms of Roth recharacterization, or Roth, I should say at this point in time, conversions or contributions. What is that tax planning strategy, and what is their documented process for collaborating with your CPA? There's something that they taught me about hiring people. Don't just ask people if they can do a job. Give them a computer and let them show you Excel. Type something up on Word for me, right, and show me. I would want to see that. What is your written tax plan for how you're going to deal with my CPA or whatever? We produce an annual tax planning letter that goes out the 1st of October every year that demonstrates how that works and what's going on. And then last but not least, what is their annual process to keep you updated and make sure that they're updated? See, they're going to be things that change inside of your life that they're not going to know about. And there are going to be things that change in your life that you may not understand impact your financial world or the importance of how they impact it. How do they know? How do they keep up? Right. So we have our family update process. Dean, how does that work?
Our family update process, we want to see it happen at least once a year. Sometimes it happens more than that because of certain situations. But that family process is, we're going to sit down and we're going to look at anything that's changed from the prior year. And have you reached a milestone in your life? Is there something now that we can start a process that we couldn't do before because you hadn't retired yet from work, or you have reached and attained a certain age? It's always a review.
All sorts of good stuff. And that's really what we would walk through. And those are the questions that I would ask. I think the checklist probably has twice as many questions. I just couldn't cover them all in this segment. So if you want to go to yourlifeafterwork.com, download that checklist, ask me any questions. Listen, the Financial Enhancement Group is not right for everyone. We take care of people who don't want to worry about their money. So if you want to know if you're already with the right person or questions that you should ask when you're thinking about a new place, feel free to ask us. I'm not here to take care of everybody. I'm here to take care of people who don't want to worry about their money so that you don't make inefficient financial decisions that lead to complications in your life, what we call frustration and devastation. Go to Your Life After Work, click on the Next Steps button. Give us a call, 800-928-4001, or go to our website, yourlifeafterwork.com. The complimentary meeting, it's 90 minutes. We're happy to have you. You bring in your stuff. We will give you things to consider. In the meantime, we'll take a break and be right back.